Hey guys, welcome back to Basics. We're at number 14 now, where my fiance Michael is taking me through kind of my trading journey as a newbie trader. We have a little playlist, so if you go all the way to the beginning, you can kind of tag along at episode 1 where we learn what is a stock, and we're all the way up to triangles now, so...
And again, note if you're seeing this on my channel, and we'll go to those socials now. If you're seeing it on my channel, go check out Jess's because she's getting the episodes one episode early. So if you're watching a new one here, there's another newer one out on Jess's. So last time we did channels. You mentioned when we turned off the recording that you liked kind of the pattern concept. You liked that you could draw them out and the psychology made sense to you. So I'm going to continue to go down that road for a while because you just may be a pattern trader, they call it. If you like that kind of stuff, it is a very good, successful way to trade. There's a lot of nuance to it because how someone will draw a pattern will be a little different from someone else. So there's a lot of skill building required, but if that's what you like, then that's great. So I'm going to leave this up for this one and the next one, but it's essentially saying that none of these patterns, along with any trading concept that anyone teaches ever, is a, infallible, holy grail type of thing. It's trying to push an edge in your favor, and more importantly, it explains risk management to you very easily, right? With all of these patterns, you are wrong when the price gets here, and it invalidates the pattern. And that's the main power of these, is that okay, I'm going to enter this because of this pattern, and I'm wrong right here. That is, if there is a secret to trading, that's it right there. So we're going to talk a bit about how all of these form. So everything that we've done to date has been with this assumption. That's, stocks always move in an uptrend, which is higher highs and higher lows, or in a downtrend, which is lower highs and lower lows. And that makes sense for trend following, and it makes sense for candlesticks. And you've brought this up a couple times where you talked about how really it's all about kind of what time frame you're looking on. Like, everything's, a uptrend on this time frame, maybe a downtrend on this time frame, that type of thing. So this exists everywhere, but inside of these, there can be different formations of higher highs and higher lows. This again was the main one, but you can see that within this pattern, you have other patterns. So yes, this is an overall uptrend, but if you just looked for this little bit right here, it would be a downtrend. Right. So this way would be a sideways. So there's kind of patterns that exist in this overall structure of trading. Again, it's just another formation of the same thing, but you said it yourself. I think I mentioned that this is still technically a downtrend until this is broken, but it's all about time frames. With this assumption that we had before, that everything moves in these kind of linear channel ways, it's true, but not the whole story, right? So what we're going to start going into is picturing more of the story. So you can see with this triangle, it's not making higher highs and higher lows, or lower highs and lower lows, right? It started at a low, and then it made a high, and then it made a higher low, and then it made a lower high, right? So you can see it's kind of, the price is converging or coiling up. So this is kind of the formation of the triangle pattern. And we'll go into flags and wedges and all this kind of stuff down the road, which is a continuation of this. But the cool part about this is that this in and of itself is an insanely powerful. Think of it as, prices always want to go somewhere, right? There's always people taking a bet of prices want to go higher, they want to go lower, they always want to go somewhere. But there's periods of time, like with this, where, again, it all comes back to that battle. Right? So what do you think that this triangle kind of represents in that, like the bull-bear fight that we keep talking about?
The buyers and sellers are coming closer together.
Right. So do you think they're doing that in a friendly nature?
Probably not.
No. So it's essentially, it's another way to represent indecision. So example is, and this is what we talked about, how candlesticks and these patterns are fractal. What kind of candlestick? So say these are 5-minute candles, and this is a whole day's worth of action, right? Mm-hmm. This is the beginning of the day, and around here's the end of the day, and we pushed all this around. What candlestick would this pattern make?
The doji.
Right. Because it opens here.
Look at me learning.
How much of that was a guess?
No, it wasn't.
Okay.
I got a good one of these.
So price starts here, right? Sells down. And then a buyer comes in and says, oh, that's a steal of a price. Pushes it up, right? Seller comes in and says, that's way too high. But then when they push it down before, instead of getting all the way to where the price was or lower, that buyer comes in at a higher price, buys it back up. And the seller comes in at a lower price. So it's the same kind of thing as the doji, where you can see they're fighting for what a fair value will be. Mm-hmm. And you got to think about, like, think of a slinky or something, like something that you compress. Like, the harder you compress it in, mm-hmm. generally the more explosive mm-hmm. it will be when it breaks. So these are basically the types of symmetrical triangles, right? And symmetrical triangle just being lower highs and higher lows. So it's the convergence of this price.
So what are you looking at to determine whether it's going to go up or down?
Well, we always trade with the trend, okay. Right? We want a trend to continue. We know that if, Tesla is up 100% on the year, that there's a lot more excitement to the long side than to the short side. So we may use this as a entry point.
But how do you trade with the trend if an uptrend is higher highs and higher lows, whereas when you get into a triangle, you're looking at higher lows and lower highs?
Well, again, and I'll show you this in a second, but it's all about time frames, right? So this part of the diagram basically shows that there was some price action before this, mm-hmm. right? So was that price action bearish or was it bullish, right? So you're always, basically your way of trading starts by zooming out and saying, okay, this stock is bullish, for example, over the long run. And then zooming in and saying, okay, well, I see a symmetrical pattern. And think about this kind of as price moves up, right? And then all of a sudden you've got a battle between buyers and sellers to try to figure out what the next move is. You sit back and wait for that to resolve one way or the other. And then you zoom in even further, and that's where you look at your candlestick patterns, right? Because your candlesticks basically tell you what happened on any given day, whereas your wide look talks about what's happening over the year, and where your pattern is probably talking about what's happened over the last week or two, right? So you see how it's looking at different time frames to kind of get the same picture.
Okay.
That makes sense?
Sort of.
The three kind of ways, and I'm going to talk about how I disagree with the ascending and descending triangles in a bit. But these are the three kind of ways that these triangles can form. The first is what we talked about with the symmetrical, where it's coiling, right? And then what do you think the ascending triangle means?
Well, I kind of have a cheat sheet in front of me here, but it's going up.
Yeah, but before the breakout.
Lows are higher.
Right, and what about the highs?
They look like they're remaining the same.
Right, so what would keep those highs remaining the same like that?
Resistance.
Right. So there's some sort of seller or something every time the price comes up, he sells at that level, pushes back down, price comes back up. And what they're saying is that these buyers are basically not waiting for the price to come down as far, and they're buying higher. But that flat top means that there is a seller or a group of sellers that are using that area to get out of their stock or to enter a short position.
Okay.
And then the opposite of the descending triangle. Right. Again, so I disagree. I trade those two completely opposite from conventional norms. And I do that for a couple things I think I've probably mentioned before. But the reason I do that is something that I'll show you in a second. There's some statistics that have been done behind this. This is the descending triangle. And this is how it would look on charts, on trade ideas charts, right? Just, you have a downtrend line, right? So that's why I taught trends first, right? You can see the stock is downtrending in this time frame, right? It may be uptrending when you zoom out, but right now it's downtrending. And then there's a level of support. So there's a clear level that there's somebody out there buying, right? You can see that, again, price action is never perfect. Had a little dip below here. Some people would ignore that. Some people would include it, right? Some people would draw this line higher at the body of the candles. Again, kind of up to you. But you have a clear area at which you can see support, where someone has come through and they've bought this stock at this level a few times before. And then you can see that every time it's rallied, sellers have come in at a lower price. So in theory, you could look at it both ways. And you could say, okay, well, if they're going to break lower, I'll take a short. And if these sellers that keep selling it at lower prices, if they fail, then I'm going to take it long, right? And that's more or less how I trade, right? And this is something from the CMT, which I'm taking, which is the Chartered Market Technician. And they've actually done a big study, and they showed that 84-ish% of the time, give or take, if it's a profitable trade, it reaches its price target. So this pattern in and of itself, so say there was an uptrend going into this, and then all of a sudden you see this descending triangle, you can see how pretty much your entire trading plan is decided by the pattern. So first, if you were to buy it here as it broke out, where would you put your stop? Where would you say, I'm wrong, this isn't a valid pattern anymore?
Like a little bit lower than the previous red line.
Yeah, like right under here.
Yeah.
Right. So you already know where you're wrong, which is great, which is why most traders right off the bat fail. They don't have that, they're like, I'm going to buy Tesla because I think it's going up, or I'm going to buy Apple because I really like the iPhone. And they don't have when am I going to get out when I'm wrong, and where am I going to get out if I'm right? They don't. And that other piece of the puzzle is what causes them to fail. But you can see in this pattern, right away, I'm wrong if it gets under this area. So your risk is from kind of, say, the bottom of this blue line, all the way down to the bottom here. It's not very big. So then the price target with these patterns are generally the width of the pattern. So you can see the blue line over here where they say, okay, well, this is generally the height of that triangle.
Right.
And I'm going to take that, and within Trade Ideas, you can just draw a line, vertical line. You can take that line, you can grab it and move it up, and you can say that's roughly going to be my target. So then if you look at it and you say, okay, this line is much smaller than this line, then it's a good trade. It's that I'm going to make way more when I'm right than I lose when I'm wrong. And then they found out that the average failure rate is only about 7% for it to go up here and then immediately crash back down. Now, I don't know what requirements were wrapped around this, but again, there's just some good kind of math behind that. And then this is the other way, right? So this is an ascending triangle where you can see it's hitting resistance up here, and then it's breaking down through this line with this resistance holding true, basically just showing that whoever was selling up there won, and whoever was buying at higher and higher prices is losing, so they're going to get out. And again, you can see that if you shorted as it broke that line, your stop would have been right above, and the kind of trend that you could get from it. So it's not that it's insanely accurate, it's just more that it's got a great risk-reward profile to be traded that way. Whereas if you were to buy here, then you have to kind of put your stop under this area. You can see how that's kind of much wider of a price. So again, this is the way you draw a triangle, and it's the way you look for how much you want to make or lose on the trade. Now, roughly, we'll talk about trailing stops and things like that down the road, but you can see that you need two lines above and 2 lines, or 2 points above and 2 points below to make the line to draw the triangle. And then what you do is you take whatever the max height, because price before that could have come from down here, but between 0.1 on this side and 0.1 on this side, that's your height that you measure. And again, it's a rough estimate
Yeah.
of what you would take as a profit. So this is one from Trader Stewie, which I think is one of the best follows on Twitter, to be honest. Who this is what he does. This is most of his trading philosophy is around these triangle patterns, like 90+% of it. And what you can see is, again, this is a symmetrical triangle, right? There's higher lows and lower highs, but the price moved up into this. And this is a pharmaceutical company. They do something related to the virus, some sort of treatment or whatever. And you can see that when it broke from that symmetrical triangle, just the massive move that happened. The stock doubled essentially since it went out of there. And again, a lot of people for a stop loss will put it either under the lower line or to say if it gets back into the triangle, I'll get out. Mm-hmm. And then if it breaks again, I'll get back in, right? It's better to take 2 tiny losses than one big one. And that is it for triangles. So next we'll talk a little bit about wedges and flags, which is kind of the triangle attached to the overall trend. So it talks about what happened before it reached that triangle. Does that make sense?
Yeah.
Any questions?
I don't think so.
Okay, well, that was a nice short one.
I was.
So again, give us a follow here. If you're seeing it on my channel, go see Jess's, vice versa. Yeah, I think that's it if there's no other questions.
Nope.
All right, we'll talk to you next time.